morning from the floor of the CME. This is Chris Robinson with Top Thread Ag Marketing with a comment here today looking at the grains. What are we looking at? What are the traders looking at in the grains? A new low for the move for December corn. Yesterday we got crop conditions. They were unchanged, but still about 75, 76% good to excellent. The crop's pollinating. The weather's perfect. And we looked like we might have a turnaround Tuesday. No turnaround Tuesday so far. They tried to take it higher earlier, and we've rolled over here. We'll see where we settle. Today's only Tuesday. It's going to be very important where we settle on Friday. But again, new low move for the day. Just statistically, where have we come? If you look back, the contract high for December corn was back in August of 2011. Okay, 616.5. What a difference a couple years makes, and perfect growing conditions. Here we are. Today's low was about 40% off the high. If you look at what a lot of traders look at statistically, what are the numbers you start looking at? They look at 50% corrections, 25% corrections. But if you take that high, contract high at 616, and chop off half of it, I've had a lot of people ask me, where's the low possibly for D's corn? Possibly, would be 308. 308's halfway back from the contract high. Just food for thought. A lot of people are looking about, where's the low? Where's the low? We're trading here at new lows for the move. Now, we're not going to go straight down, but unless we get a weather issue, probably not going to have higher prices. So at any time that can change. But right now the supply situation looks like we're going to have a gigantic crop. Moving on to the wheat. Again, not much of a turnaround Tuesday there either. December wheat for Chicago, it's had about a 36% correction from its contract high. The contract high was back in November of 2012, 865. If we were to have a 50% correction from that high, that portends to a low around 433. Again, we're not there yet. But again, when we're sitting at 4-year lows, people start looking, well, how low can we go? So that's just a math problem that a lot of technical traders look at. Finally, with the beans, how low could we go there? If we take out this 1065 level in November beans, that opens up the door to a test of the contract low, which was 1054. That was back in November of 2010. So, although we had a really good rally, and you can look at the life of contract prices, the life of contract high for November beans was 1333. That was in September of 2012. Here we are in July of 2014, quite a bit different story. So look at those levels, and a lot of professional traders will look to try and sell rallies until we get a different supply and demand situation. Fundamentally, the prices look like they have a little bit more work to go on the downside. However, a lot of people look for trend changes to try and catch the snaps back. Not last week we had a 50-cent rally in the beans. So my point is this: although the trend is lower, there are going to be opportunities to catch rallies and to reestablish shorts. This is a typical grain market, but unless we get some sort of weather issue, long term, it points to lower prices. That's about it. Look for those trades in the grains. This is Chris Robinson. Have a great day.